In this week's video, we'll review the inflection point charts to try to help us answer the question, which way is the market leaning? To view the video in full screen mode, use this icon in the lower right-hand corner of your video player. To improve the clarity of the charts, use this icon in the lower right-hand corner of your video player. This is the daily chart of the global stock index that we've been looking at over the past few weeks. For those of you that are new, this is an A to B move. This is a bearish move and a downtrend. Here it's normal and to be expected to have retracements that come back up into these three major fibs. Updating this chart as of the close on Friday, May 20th, you can see we're still within the three major fibs. This index had a good day on Friday. It was up 1%, but it really didn't do anything to the chart here. The last thing it did, even in the short run, was make a lower low. Friday, we didn't make any particular important higher high really on any time frame. A quick update to the long-term fibs. This is 2006 here. This is 2011 here. This was our bearish resolution near the 61.8% retracement. This is our bullish resolution near the 61.8% retracement. And this is the present day. Zooming in on the present day as of Friday, May 20th at the close, you can see we're still in that indecisive territory here. If you want more detail, you can Google this title here and it will show a little bit about what it could mean to a portfolio to get the next move right out of one of these indecisive looks. The bullish move here and the bearish move here were both relatively large moves. In the bearish case, from the 61.8% retracement, there was a 56% loss. This shows you what happens to a portfolio. And conversely, in the 2011-2012 case, from the 61.8% retracement, there was a 44% gain, telling us that it's extremely important to maintain that flexible and open mind. Price will guide us, and if we pay attention with an open mind, we should be able to capture a good portion of what could be a very large move up or down in the stock market. NYSE composite weekly, we're just looking at some generic weekly moving averages here. You can see this is somewhat of a mixed bag too. This is a bearish rollover here. The mixed bag from a negative perspective, slope is down, slope is down. Slope looked like it was trying to turn back up and now it looks indecisive. From a positive perspective, price was able to move above the moving averages, so we'll learn something either way, depending on which way price breaks in the next few weeks or months. The broad NYSE composite daily was up 0.49% on Friday, but you can see it didn't recapture what appears to be a failed bullish breakout here. Obviously, if you're a bull, you'd prefer to see price get in this area here. More importantly, make a higher high above the April/May highs here. If we look at the same chart using high-low close bars instead of just closing prices, we can see we broke below this blue trend line here and have not recaptured it yet. Also, we have some divergences on the top end and here. So, for example, price, this low here is quite a bit higher than this low here, but you can see RSI has a divergence. Instead of making a higher low as price did, it's making a lower low. This is the long-term NYSE chart that we've been looking at. It goes all the way back to 2006 where my cursor is here. You can see the stock market from a closing perspective peaked in the financial crisis at 10,301, and price seems to be telling us that that is an important level. We're still battling around that level. We closed above it a few weeks ago. This week we were above it and below it during the week, and we closed below it at 10,200. 244. Like many of the charts, we'll learn something either way. It's noteworthy that this move here is during the period where the Fed stepped in and talked up the markets pretty much every time they started to fall. Here, we start to shift into a period where the Fed is trying to raise rates rather than talk up the market, and you can see the difference so far with price. No real resolution here on our 60-minute chart. For the most part, we've been staying between 2039 and change and 2084 and change, and we closed inside of that region. A couple noteworthy things. We did break the lower bound on Thursday. We went below this level here, and you can see on a 60-minute chart, what we've been doing lately is making a series of lower highs and lower lows. If you're a bull, a good step would be to get above this blue line here, and more importantly, to close above 2085 and sustain that level. The closing price on Friday, May 20th, was 2052 and change. In this version, price is giving us some negative feedback in the short run here. Support, support, support. On this time frame, we broke support. We haven't recaptured it relative to the rally on Friday. We closed below this blue line. And prior to that, we have that bullish breakout here that now looks like a potentially failed bullish breakout. Resistance, resistance, resistance. Price was rejected. Bullish breakout, but then we gave it back. The VIX Fear Index daily on Friday was down 6.92%, but it didn't really change the story that we've been looking at here. As long as the VIX holds above this blue line here, it leaves the reversal door open. It held in this area here, and in August of 2015, the S&P 500 reversed and the VIX spiked. If you're a stock market bull, you'd prefer to see the VIX move into this area here and hold below the blue line. Another broad index, the Wilshire 5000 daily. The chart pretty much speaks for itself. Support, support, resistance, 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 resistance. We've stalled in the same general area, and we'll learn something either way from price if we move into this area here or if we start to fall back and fill the white space below. This is the weekly chart that we walked through last week. No real resolution here. Resistance, 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 indecisiveness, what appears to be a bullish breakout. Now we gave it back, and we rallied this week right back to the blue trend line. That's the good news. If you're a bull, at least we were up 5 and change this week, 5 points basically. The bad news is this still has a full bore bearish look where price is below both moving averages, blue is below red, and the slopes of both are down. Contrast that with a full bore bullish look, price above both moving averages, blue above red, and the slopes of both are up. This is still very indecisive and undecided, and we'll learn something either way in the next few weeks. Notice it took several weeks for price to resolve the indecisive nature in this area here. Eventually it was resolved to the downside. Kind of a mixed bag here. This is global stocks weekly. Last week we said that RSI held above 50, and that told us to keep an open mind about what would happen over the past 5 trading sessions. Well, we did go up 0.5% over the last 5 trading sessions, but you can see here, holding RSI 50 doesn't mean necessarily we're going to go on to make higher highs. It held here, stocks rallied for a few weeks, and then they dropped. However, not too many bad things can happen from a long-term perspective as long as weekly RSI remains above 50, and we did close above 50 on Friday, May 20th. This is the same ETF, global stocks, ACWI, 200-day moving average, bullish slope, bearish slope. This is the slope as of the close on Friday, May 20th. NASDAQ weekly also closed with an indecisive look. We have price near the moving averages, but blue is still below red here. This hasn't resolved itself either. However, forget the moving averages and forget trend lines. Let's just look at highs and lows here. What's the last thing that's happened on this chart? It's made an important lower low. This low here is lower than this low here. This high here is lower than this high here, and thus far, this high here during the current rally attempt isn't even remotely in striking distance to exceeding this high here yet. We'll learn something either way in the next few weeks or months. Dow weekly also paints a similar picture. Resistance, resistance, resistance. Bullish breakout. What once was resistance may now act as support where the green arrow is. So it looked like we had a bullish breakout, a successful retest. Now we're rolling over. I guess you could call this a second retest. We closed above or on the blue line on Friday, May 20th. However, from a moving average perspective, this is a much lower probability look here than the look here, 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 and here. It's possible that we have a look in here where we're rolling over and it could take some time. It's also possible that this blue line will hold and will move in this direction and recapture a full bore bullish look. We'll learn something either way, but this is still a yellow light saying be patient and don't force our capital into anything until price gives us a little bit more information. NYSE composite weekly with the moving averages. You can see we get the bullish moving average crossover in February and go from a full bore bearish look to a full bore bullish look. Now we're back to a full bore bearish look with price below both moving averages, blue below red, and the slopes of both are down. However, we could easily morph back into a look like this if price decides to rally. Most of the 200-day moving averages that we've looked at have had somewhat of a clear bearish slant. The Dow tells us to keep an open mind. You can see here it actually turned up and then it rolled over. This isn't bullish, but at least it's moving sideways here. So again, telling us to keep an open mind. It's possible the Dow is trying to base from a longer term trend perspective. Here we based for a little while and went in this direction. It's always possible that we could go sideways and then move in this direction. Same concepts here. Emerging markets were the darlings off of the rally lows in 2016, but it's very, very difficult from a long-term perspective to say that the long-term trend has changed yet, given the slope of the 200-day moving average as of the close on Friday, May 20th. The CCM market model tracks numerous weekly charts and risk-on, risk-off ratios. Small caps is another one. Resistance twice up here, here and here from a weekly perspective. Resistance here, breakout, what looks like a failed breakout, and we still don't have a resolution yet. Literally, price closed on both moving averages, and the moving averages are roughly flat. So that's about as indecisive as you can get from a short-term perspective. Price will guide us. Just keeping us updated on the transportation average. This is our bearish A to B move here. We moved back up on a weekly chart right back into the meat of the fibs. This is the 38.2. This is the 50% retracement. And this is the 61.8% retracement of this move from A to B. Resistance, resistance, we're still in that general area. The tech-heavy NASDAQ was one of the leaders of the global markets in 2015. Look at this nice, convincing, high-conviction slope here on the 200-day of the NASDAQ. It rolls over here, and as of the close on Friday, May 20th, this is not a confidence-inspiring look. It may change, but we don't anticipate that under our system. We need to see it. Materials, XLB in the ETF world relative to the S&P 500 SPY is the second ticker symbol in this ratio, tracked by the CCM market model. Once again, the reflation or weak dollar trade is at a possible inflection point here. We'll learn something either way relative to what happens at what is now potential resistance near these blue lines here. Equal weight, S&P 500 index here, support, support, same angle, resistance, bullish breakout, failed. Now, here, this, right here where my cursor is a higher low in price relative to this low. Look at the slope of this. However, RSI has made a discernible lower low here, telling us that we should be skeptical of any move in this direction until price actually proves something to us. How would price prove something to us? Well, it could start by exceeding this high here, then this high here, breaking above the green line here and holding it, and more importantly, breaking above the green line, exceeding this high, and then starting a bullish trend in this direction. This is the monthly DeMark chart that we walked through in last week's video. DeMark charts and indicators are proprietary tools from Market Studies LLC. Just want to remind ourselves here, why are we constantly talking about keeping a flexible and open mind? And why do we frown upon forecasting? If I go out and tell people in the public domain that the S&P 500 is going to 1680 down here where these red diamonds are, then it's going to be very, very difficult for me to look at charts and new data with that flexible and open mind. I will look at every single chart and every piece of incoming data with a filter that says we're moving to 1680 on the S&P 500. Right now, the data that we have in hand is indecisive, but in the short run it tells us to be open to a move in this direction. Data and charts can begin to improve at any time. So let's look at some guideposts here. In DeMark, if we close above 2075 at the end of the month, this is a monthly chart, that would improve the probability of moving towards the teal diamond at 2340. From a price perspective, the high here is 2011 and change. So if we saw a monthly close above 2011, that would also improve the probabilities of pushing toward the teal diamonds. Right now, this chart does an excellent job of summarizing that we're near a potential inflection point similar to 2011 or similar to 2008. We could get a big move in a bullish manner or a big move in a bearish manner. The only way that we'll capture the big move is to look at new information with a clear and unbiased mind. As always, the charts, price, the hard data, the indicators, and the risk-on, risk-off ratios in the CCM market model will guide us if we are willing to listen with that all-important, flexible, unbiased, and open mind. How do we track all of this and convert it into a usable and actionable format in a reasonable amount of time? The sub-models, we answer binary questions, some of them manually done, some of them programmed in Excel, and we also enter in unbiased and hard data. The sub-models allow us to get a handle on the market's current profile, and the master CCM market model then looks at the current profile, compares it to past profiles, and recommends a prudent allocation between risk assets such as stocks and conservative assets such as bonds. Conservative assets can consist of cash, bonds, currencies, or any number of investment options. If you'd like to learn more about the market model or our money management services, you can visit our website, follow along on Twitter, Facebook, read our blog Short Takes, or watch past videos on the Shavaco Capital channel on YouTube. The material in this video has no regard to the specific investment objectives, financial situation, or particular needs of any viewer. This video is presented solely for informational purposes and is not to be construed as a solicitation or offer to buy or sell any security or any related financial instruments, nor should any of the content be taken as investment advice. Any opinions expressed in this video are subject to change without notice, and Shavaco Capital Management, LLC, or CCM, is not under any obligation to update or keep current the information contained herein. CCM and its respective officers and associates or clients may have an interest in the securities or derivatives of any entities referred to in this material. CCM accepts no liability whatsoever for any loss or damage of any kind arising out of the use of all or any part of this material. We recommend that you consult with a licensed and qualified professional before making any investment decision.